Is the PayPal era officially over, or are we looking at the ultimate buy-the-dip opportunity of the decade? That is the question everyone is asking right now. It's late February 2026, and if you've been watching the markets lately, you know the story hasn't been pretty. Since early February, PayPal has been sliding, leaving many to wonder if this fintech giant has lost its magic or if the market is just overreacting to short-term pressure. In today's video, we're cutting through the noise. We'll look at the recent news, dive into the hard numbers, revenue, profits, and cash flow, and check the charts for the key buy zones you need to watch. So why the recent drop? It's a perfect storm of competition and shifting market sentiment. The fintech space is more crowded than ever, with Apple Pay, Google Wallet, and dozens of buy now, pay later services. Growth expectations are being squeezed from all sides. Investors are also worried about margins, fearing PayPal is spending more on marketing just to keep its users. Combined with a general tech sell-off this February, the stock has taken a hit. But, as we know, the price on the screen doesn't always reflect the underlying strength of the actual business. To find out if this is a real problem, let's look at the fundamentals. First, revenue, which is the total money brought in before any costs are taken out. In 2021, PayPal did $25.3 billion. That number has climbed every single year since. By 2023, it was nearly $29.8 billion, and in 2025, it hit a massive $33.1 billion. For the full year 2026, the expectation is $34.1 billion. The takeaway here is clear. People are still using PayPal more than ever. The platform is growing steadily despite the competition, showing a very healthy expansion. Next is operating profit, the money left after the day-to-day costs of running the business. This is a key indicator of how efficient the company's management is. In 2021, this was $4.2 billion. We saw a dip in 2022 to $3.8 billion, but look at the recovery. $5 billion in 2023, $4.3 billion in 2024, and a peak of $6 billion in 2025. Even with a slight 2026 estimate of $5.9 billion, business operations are much healthier and more efficient than they were just 2 years ago. Then there's net profit, the actual bottom line after all taxes and interest expenses are paid. After a big drop in 2022 to $2.4 billion, PayPal showed its true resilience as a market leader. By 2023, it was back to $4.2 billion, and by 2025, it reached a strong $5.2 billion. This recovery proves PayPal is a profitable machine that knows exactly how to navigate a rough patch and bounce back stronger. Finally, we have free cash flow, the actual cash left to reinvest or pay back to shareholders. This is the metric value investors love the most because it represents real flexibility. From $5.3 billion in 2020 to a massive $6.6 billion in 2024, PayPal generates serious cash. With over $6 billion expected for 2026, the company has a massive safety net. Cash flow like this equals long-term stability in almost any market environment. Now let's translate these numbers to the charts. As of late February 2026, the stock has moved into the short-term target zone between $25 and $41. Since we've already entered this range recently, this area acts as a potential support zone where buyers typically step in. It's a logical floor for the current slide and an area where historical demand has often kicked in before. Looking long-term, if PayPal continues to execute and maintain its dominance, we have a long-term target zone between $458 and $521. Now that is obviously a massive move from today's levels, and it won't happen overnight. It represents the upside potential if the company continues its fundamental growth over the coming years. It's a vision for the future, but the solid foundation we just discussed is already there. In summary, the fundamentals are surprisingly stable. Revenue is up, profits have recovered, and cash flow is strong. The stock has dropped significantly this month, but historically that is where the best opportunities are found. If you believe in the platform's future, These levels are worth a very close look. But what do you think? Is PayPal a falling knife you're staying away from, or is this a massive value play for your portfolio? Would you buy at these levels, or are you waiting for more confirmation? Let me know in the comments. Thanks for watching, and I'll see you in the next one.